Wall Street forecasters struggle, just like investors, to figure out the outlook for trade and its effects on growth next year. In general, they say prolonging the trade war and increasing tariff has three effects. One, increases downside risk to the economy and limits the potential for an upside surprise. It also confirms their modest growth forecast for next year. Some economists have baked in what they call trade peace, and some just aren't buying it. Goldman Sachs, writing on November, quote, "We expect the drag from the trade war to fade gradually, although much could still go wrong. We now expect a phase one agreement to be signed in coming weeks." That was back on November 22nd. But after the president yesterday said there may not be a trade deal until after the 2020 elections, Mike Ferroli at JP Morgan told me, quote, "We never swung all the way to thinking the trade peace was breaking out, so it's not like we have to do a big pivot here." Goldman has a more upbeat 2020 outlook at 2.3%. They're on the right side of the survey we did yesterday. They're banking on trade peace. JP Morgan not banking on it all, only at 1.5%. UBS, most pessimistic of all, at 1.1. We contacted a half dozen economists after the president's comments. Most have just about had it with taking out the erasers. Several inclined to assume the worst on trade and be pleasantly surprised if they're wrong.
Is there a trend to the growth, how it ebbs and flows during the year?
So what you see is not only did we ask everybody their annual and then we averaged all that up to, the average, by the way, is 1.7 there. What we see is that there's a bit of a debate. Is the fourth quarter right now or the first quarter the bottom of this slowdown? And what you see is that it goes to 1.5 now, kind of 1.5 on the next quarter, and then it gradually ticks back up, but it only gets to 2% on average by the end of the fourth quarter next year.